What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk about how I beat the market last year in 2022. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos. Subscribe to my second channel for weekly videos. Get yourself some DYDSS merchandise to help support the channel. Try out some G Fuel Energy Formula, $5 off your first order by clicking the link in the description. And of course, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. For every friend you refer, Webull's going to give you 15 free fractional shares of some of the most rock-solid companies on the planet: Ford, Coca-Cola, Starbucks, Apple, the list goes on. Everything will be linked in the description. All right, so today I wanted to very quickly talk about my performance last year in 2022 and compare it to the market overall in general across the board last year in 2022. And I figured a good place to start would be with the market. Now, when people talk about beating the market or anything like that, they're usually referring to the S&P 500. So let me show you a screenshot that I took on New Year's Eve last year in 2022. This is the Vanguard S&P 500 Index ETF. Down 19.64% year to date in 2022. Not too hot. Not too great. There will be good years, there will be bad years, there will be fantastic years, and there will be atrocious years. The S&P 500 on average returns about 10% annually. That's factoring in the years where we see a negative 19.64% return, and it's also factoring in the years that we see 25% returns or 24 or 23% returns like we saw in 2021. On average, if you blend them all together, on average, about 10%. Not bad. So I saw 2022 as an opportunity to really lower my average cost and continue investing into the market on a daily basis, Monday through Friday, as long as the market's open, continuing lowering that average cost and investing in something that has an average return of about 10% and hopefully build that position up and make that the backbone of my investment portfolio. Now, for my own personal investment portfolio, yes, the S&P 500 is part of it, but it's actually only 4%. My portfolio, or at least my main portfolio, unfortunately, I was in the red. I'm not afraid to admit that. I was down. I'm not going to show dollar amounts because I don't think that's a smart thing to broadcast on the internet, how much money you make or lose. I don't like doing that. I don't have a problem with percentages, though. 1.6%. I was down 1.6% last year in 2022. But I did not start investing in 2022. I actually got started in 2019, just trying to ease my way into the water, and I didn't get aggressive until right after the crash of 2020. All those opportunities presented themselves to me, and I saw a lot of, doors that I wanted to not just walk through, but run through. And I was able to scoop up some of the most valuable companies and brands on the planet for 20, 30, 40, 50, 60% off. And because I did that so much in 2020 and into 2021, and obviously still throughout 2022, overall, from day one to present day, all the years combined, I'm still up well over 20%. So I am not underwater. I just had a mildly rough year in 2022, which I didn't mind. My position hasn't changed even since before I was even investing. I've said the same thing about silver and gold, which, by the way, we'll get into in just one second, but I said the same thing about silver and gold from the very beginning. And I've been stacking precious metals since before I started investing in the stock market. I prefer the red days over the green days. I'm new to this. I've only been stacking for 5 years. I've only been aggressively investing for, 2.5 years? I'm brand new. That's almost no skin in the game at all. I have decades to go. I don't want to go to the moon just yet. I'll go to the moon in another 20, 30 years. So I prefer the red days because it gives me a chance to buy more at a cheaper price, more silver at a cheaper price, more of the S&P 500 at a cheaper price, more of some of the best rock solid companies, stocks on the planet for a lower price. Yes, please. Now, the way I was able to beat the market was in a variety of different ways. And the main way was by investing in some of those blue chip behemoths that that's what I refer to them as. And friendly reminder, since we're talking about the market, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. You can deposit as little as you'd like, even as little as a penny. And for every friend you refer to the app, Webull's going to give you 15 free fractional shares of some of the most rock solid companies on the planet: Ford, Coca-Cola, Starbucks, Apple, the list goes on. Do not pass up on an opportunity. The blue chip behemoths. Some of the quote-unquote recession-proof stocks. A majority of them did actually very, very well last year in 2022. Some of which I'm up well over 100%. Some of which I'm up 10, 20%. Some of which I'm down just a hair. And that's what I like about my portfolio. I've diversified to the best of my ability, and I know I'm being a little bit vague when I talk about the individual stocks, and that's just because I don't want to recommend a stock. It's just that just doesn't feel like the correct thing for me to do. I don't want to recommend any individual stock. Index funds, I believe, are a better way to go because you get all the stocks in one. But anyway, I started buying into the quote-unquote recession-proof stocks, the blue chip behemoths, as I like to call them, at the very bottom of the market in 2020. And like I said, I was able to get most of these for 20, 30, 40, 50, 60% off. And I've seen massive gains because of that. And yeah, 2022 was a brutal year, and it chopped away a lot of people's gains that year. But I'm still up over 100% on some of these individual stocks. I'm still up over 20% across the board when it comes to my entire portfolio. And the S&P 500 currently only makes up 4% of my investment portfolio. I want to build that up to 40. I want the S&P 500 to be the foundation of my investment portfolio. I want the S&P 500 to be the backbone of my investment portfolio. Just like I always used to say, the silver eagle was the foundation or the base of my stack of silver. Same principles apply. I invest in a very similar way that I go about stacking. I go for the rock solids. I go for what's recognizable. I go for the everyday brands. Kind of like how I go for the everyday coins. That's just my way of going about it. Now, very quickly, since I brought up silver and gold, I also wanted to just toss out there that not only did I beat the market last year, because if you got anywhere between 0 and negative 15%, you technically beat the market. But if you were in the green, hey, good for you. Silver was absolutely in the green. It was up 5.53%. So silver beat the S&P 500 last year. Gold did as well. Gold returned 1.34% in 2022. Both of these screenshots were taken on New Year's Eve. I took all these screenshots on New Year's Eve because I knew I wanted to make this video in January. So pretty interesting. At least I consider it to be interesting. But anyway, that's how I went about beating the market in 2022. It was mainly due to the fact that I made certain decisions 2 years prior in 2020. And I stayed committed. I continued doing what I was doing throughout the year of 2020 and all throughout the year of 2021 and all throughout the year of 2022. My strategy hadn't really changed all that much. I've just been implementing or integrating more index funds because I believe it's a smarter, safer way to go long term. I don't have to worry about looking for the needle in the haystack. I can just buy the whole haystack and the needle is in there by default. That's what I do. Not financial advice. I'm just documenting my journey. But I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. When it comes to beating the market, there's no shame in not beating the market. In fact, I'm not really all that focused on beating the market to begin with. I've just coincidentally beat the market every single year since I started investing. But I want you guys to head on down to the comments and let me know anything and everything related to today's video topic. Your investment portfolio, you don't have to share any specific numbers, but higher or lower than negative 19.64%. Head on down to the comments and let me know. If you guys like today's video, please hit that like button, subscribe if you're new, subscribe to my second channel, which is my backup channel for exclusive weekly content. Get yourself some DYDSS merchandise to help support the channel in the biggest possible way. Try out some G Fuel Energy Formula, $5 off your first order by clicking the link in the description. Over 50 different flavors to choose from. And of course, make sure to go and get your up to 12 free fractional shares by downloading Webull and funding your account. For every friend you refer, Webull's going to give you 15 free fractional shares of some of the most rock-solid companies on the planet. Ford, Coca-Cola, Starbucks, Apple, the list goes on. Do not pass up on an opportunity. Webull link in the description. Thank me later. And I want you guys to head on into the comments and let me know one more time, what are your thoughts on everything shared in today's video? Not the greatest year. Last year, 2022, I was down a little over 1%, still up well over 20% overall. I'm nowhere near concerned. I was just capitalizing on the bear market and continue lowering my average cost and build something up that I know for an absolute guaranteed fact is going to be generational. Head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. See you tomorrow. Don't you dare stop smiling. Peace.